I think you are very happy with the income tax paper because this time paper is very easy when compared to earlier attempts. Coming to the point, the purpose for making this video is the analysis of question paper in brief within 10 to 15 minutes. Okay, so first question from total income chapter, which is very easy. Generally, total income is somehow difficult when compared to other problems in each and every attempt, but this time total income is very easy and it's a straight problem, and all the adjustments relating to this problem was covered in our material in various problems. So nothing new in this problem. Each and every adjustment was covered in our material in various problems. If you prepared well, then you can answer this question very easily. Okay, so this is the profit and loss account. These are the adjustments. First adjustment is 40A subsection 2 related adjustment, unreasonable payment made to relatives, commission to his brother. 40A subsection 2 adjustment, very easy adjustment. Second adjustment, so 4,000, first adjustment is 40A subsection 2, it's an unreasonable payment made to relatives, disallowed as per section 40A subsection 2. Second adjustment is 40A subsection 3, but 40A subsection 3 is not applicable here. No disallowance gets attracted because the payment made to transport carrier. If you made the payment to transport carrier, you can make the payment even in cash up to 35,000. 40A3 gets attracted only if the payment exceeds 35,000. Otherwise, no disallowance. Okay, so very easy adjustment covered in our material. Next one is it's an omission of expenditure, 4,000 per month paid to a staff which is not recorded in the books of accounts. Actually, this is having two alternative methods. One is now recorded as new expenditure. Another alternative is this amount to be treated as a deemed income. You can follow any of these alternatives. Okay, alternative 1, recorded as new expenditure. Alternative 2, treated as deemed income. Next, bank term loan interest actually paid up to 31st March 2024, 2000, balance was, it's a 43B adjustment. The payment must be made within the due date for filing the return of income. Otherwise such expenditure is not eligible for deduction. Next one is miscellaneous expenses include 10,000 contribution to Prime Minister's Relief Fund. It's an 80G deduction, chapter 6A. Miscellaneous expenses include 10,000 to PM Relief Fund. Category 1 payment, 100% deduction, 80G. So it's a easy adjustment. And loss on sale of shares sold within a period of 6 months is nothing but short-term capital gain. And the profit on sale of shares held for 2 years and STT paid, it's 112A capital gain. Long-term capital gain under section 112A. It's a 2 easy adjustments. All these adjustments were covered in our problems and in our material in various problems. There is no difficult adjustment in this. All these are very fundamental adjustments repeatedly covered in our material in various problems, again and again. Okay, coming to the next adjustment. This adjustment is relating to income from house property. The assessee is having house property head also. So that is self-occupied property. NAV shall be taken as nil minus only one deduction to be claimed. That is interest. Maximum 2 lakhs subject to some conditions. So income from house property, self-occupied property. And most important information here is the loan was taken in 2016-17. Loan amount does not exceed 50 lakhs. Loan amount does not exceed, house value does not exceed 50 lakhs. And the loan amount 25 lakhs. He is eligible to claim deduction under section 80EE. 80EE deduction is also available in this problem. This is another chapter 6A reduction. Okay, simple adjustment. It's simply house property head. So the house was nowhere used for business or profession. Therefore, so the house related expenses not to be recorded in the above P&L account. Actually, he has not recorded in the above P&L account. So we are not dealt within the profit and loss account because house not used for business or profession. Okay, so house property head with chapter 6A reduction 80W. That's it. Simple adjustment. Okay, and so a very important observation here is in this problem the assessee is having so house property head, PGBP head, capital gain and other sources also. In P&L account there are dividends and winnings. These two are taxable under the head income from other sources. So this is the capital gain as well as house property. Around 4 heads of incomes are there in this problem. Okay, Income Tax Act we should require to calculate in working note and compare with the amount debited in P&L account and decide whether it is allowed or disallowed. So this is the total income problem. So it's a very easy problem. Even average student, below average student also can attempt this problem. Okay. Second one. Question number 2. This is from residential status. It's a straight question covered in our material. In residential status 1, including residential status 2 also. There are 2-3 problems are there like this in our material. Answer this question, compute the income of assessee in 2 different residential status. One is ROR status. Second one is RNOR. Number of problems like this covered in our material. So these are the income details. So 2 easy problem covered in our material. So in various areas and the number of problems are there in our material. If you prepared well, you can answer this question also very easily. Okay. Next. Third one is TDS TCS problem. 2 sub points. Point number 1 is TDS related problem under section 194I, rent related TDS section. Point number 2 TCS 206C 1F. So 194I. So 2 points, one is covered in TDS, second one is related to TCS. The 2 are very easy points. Okay. Question number 3A. 2A residential status, 2B TDS and TCS. Okay. So and question number 3A. Ravi received as an advance of 2 lakhs from a closely held company and having share capital shareholding of 22%. This is the problem from other sources, income from other sources, deemed dividends under section 222E, under section 222E. This is the very easy question. Number of points like this in our material, including concept questions also. Please verify it carefully. Deemed dividend section 222E. Accumulated profits distributed by a company in which public are not substantially interested by way of loans and advances to a beneficial owner. That's the point covered in 222E, deemed dividend section. Very easy problem and covered in our material also. And second one is, it's a PGBP related problem, scientific research, section 35. Section 35. Scientific research expenditure, deduction under section 35. Ascertain the deduction under section 35. Various points are there. Some of the points are relating to contributions. Some of the points are related to in-house research. Anyway, in-house research as well as contributions, both are eligible for deduction at the rate of 100%. Of course, in capital expenditure, land is not at all eligible for deduction. Any other capital expenditure is eligible at the rate of 100%. Even contributions also eligible for deduction at the rate of 100%. That's the provision of section 35. Deduction under section 35. It's taken from PGBP chapter. It's too easy and fundamental problem. 2 or 3 problems are there in our material like this. Okay. Next one. B. Mr. Surender furnishes the following particulars from the previous year ending 31st March 2024. He had a residential house inherited from his father in December 2009, the fair market value of which on 1/4/2001 is 13 lakhs, and 13/14 further construction and improvement costing 10 lakhs. The house was originally purchased by his father on 1/3/2000 for 10 lakhs rupees. On 1/5/2023, the house was sold for 75 lakhs. This is the capital gain problem. Too easy problem, too fundamental problem, and one of the important point here is here capital gain with exemption under section 54. 54 exemption is there in this problem. That is most important area. Capital gain with exemption under section 54, because he reinvested the amount in residential house property 12 lakhs rupees. Okay, so two fundamental problem, two easy problem. So the problems covered in our material like this, 2 or 3 problems are there relating to 54 exemption in our material. Transfer of residential house and the gross capital gain shall be reinvested into another residential house property. Then the assessee is entitled to claim 54 exemption. Please go and verify. Next question 4A. So this is the question from set off and carry forward chapter. Set off and carry forward chapter. This is also very easy problem, and so many of problems are there in our material like this. Okay, so here the details of house property income 2 lakhs, business PGBP 3 lakhs, short term capital gain on sale of land 2 lakhs, it's a 112. Short term capital gain, short term capital loss on sale of equity shares listed in recognized stock exchange 75,000, it's a 112 loss. This is 112. Next one, interest on bank fixed deposits 50,000 received by his son, age 21 years, is a major son, out of money gifted by Mr. Joshi in 2022. So it's not eligible for clubbing because he is a major. So that is one of the important point in this problem. Okay. Next one is loss from speculative business. Speculative business loss can be adjusted against only speculative profit. If not available, then it must be carried forward to subsequent year. Next, loss from owning and maintaining racehorses. This is also like speculative loss. It can be adjusted against only from income from owning and maintaining racehorses. Otherwise, can be carried forward to subsequent year. Okay. Next one, most important point here is seventh one. Most important point here is last following are the brought forward losses. These are the very important in this problem. The main twist in this problem is, first one is brought forward house property loss from 21-22. It can be adjusted against house property income. No objection. Okay. Brought forward business loss of proprietary business from assessment year 13-14. Assessment year 13-14. This is the important point in this. Generally, the carry forward period for business loss is 8 years. But here, this loss has been carried forward since 2013-2014. The 8 years carry forward period already lapsed. Therefore, this loss is not eligible to set off in current previous year. Just ignore it. That's the important point. And the next one, unabsorbed depreciation relating to the 14-15. There is no time limit for carry forward of this amount because it can be carried forward for unlimited period. No objection, can be adjusted from any head of income except salary and winnings. And the last one is, this is also an important point. Two important points are there. Brought forward long-term capital loss. It can be adjusted against long-term capital gain in current previous year. But question is, important point here is, there was a condition in set off and carry forward, that is, if you want to carry forward any loss except house property and unabsorbed depreciation, so you must file the loss return within the due date for filing the return of income under section 139 subsection 1. Otherwise, such loss is not eligible to carry forward. That's the important condition. But in this problem, this condition was violated by the assessee. So, brought forward long-term capital loss for the assessment year 18-19, 90,000. Return of income for that previous year was filed on 31st January 2019. So this is the assessment year 18-19, that is previous year 17-18. What is the due date for filing the return of income of previous year 17-18? Here the assessee is an individual, therefore the return filing date is 31st July 2018. This is the last date for filing the return of income. But here is, he has filed the return of income in January 2019. That was filed lately. Here the consequence is, this long-term capital loss is not eligible for carry forward. Therefore, this loss cannot be set off against the income in current previous year. Just ignore it, because the loss return has not filed within the due date in relevant for that previous year. That's the important point. Okay, so this is the problem relating to set off and carry forward, which is very easy except last important 2 points. Next one, point number B. State with reasons whether the following persons are required to file return of income. Return filing requirement. The cases where the persons are required to file return of income. Ascertain in these cases the assessee, is he required to file return of income or not? So if required, and what are the due dates? If not required, what is the reason? So this is the theory question from return of income chapter. But theory question in practical manner. It's not a straight theory question in practical manner. Analyze the each case and answer whether he is required to file return of income or not. It's a purely return of income chapter related problem. Okay, all these cases were covered in our material, but names and numbers are changed. Next one is, this is also from return of income chapter. Return of income, the cases, special cases, a person is required to file return of income. It's a straight theory question. So insert the rules, notified, which are all the persons other than the company or firm who is not required to file return of income. 139(1) must file the return of income. State who are the required to file, compulsory file the return of income. Special cases for filing the return of income. Generally, companies and firms are mandatorily filed to return of income. Other than companies or firms are required to file return of income if their total income exceed basic exemption limit before claiming chapter 6A and 54 series exemptions. If any person not covered in these 2 cases, and firm and company, and the second case, then he will be covered in special cases. In some other cases, even if assessee is not having any income in India, he is also required to file return of income in some cases, in special cases. Example, having he is a beneficial owner or beneficiary of an asset located outside India, or he is a signing authority of an account located outside India. These are the special cases. In these cases, the person is required to file return of income and his status is ROR. Status must be ROR and having a beneficial owner or beneficiary of any asset located outside India, or signing authority of an account located outside India is required to file return of income. And some other cases are there, electricity bill case and a foreign tour expenditure case and deposit in a bank account case. So there are lot of cases in which the assessee is required to file return of income mandatorily, even if he is not having any income. So mandatory cases for filing the return of income, that is, list out the mandatory cases for filing the return of income. This is the strike question relating to section 139 subsection 1. So my dear students, in my opinion, so since last 5 attempts, this is the easiest question paper. I hope for who are well performed in your examination. Thank you to all. Okay.
So good evening friends, now we are there with you with respect to analysis of our GST question paper in May 2024. So section B, If you observe, already you wrote the exam, if you observe this particular 5A, generally it is of 10 marks. And in maximum circumstances, already I told you previously, day before exam strategy, that this particular question is going to be asked from value of supply plus ITC, or value of supply plus ITC plus exemptions, or exemptions plus value of supply. In any of these combinations, the question can be asked. Already we discussed that one in the day before strategy. Just like that, this 5A, which is a comprehensive question, majorly it was asked on two chapters here, that is value of supply and ITC. See, Evershank Private Limited, a GST registered supplier located in Jaipur, Rajasthan, engaged in supply of taxable packaging goods and consultancy services. That is okay. With respect to this, these are the details of outward supplies. So, supply of the goods 18 lakhs. Further received 50,000 from Vaidehi Enterprises towards the freight charges. Okay. So, definitely this particular topic is value of supply. Next one is here, supply of the goods worth 35 lakhs. Here 60,000. With respect to that 60,000, what is the position ma? It is also value of supply. And supply of services here, it is also value of services. Value of supply, the discount topic that was given. Say this. That means freight charges comes under, I think, this topic now 15 to inclusions. The major topic will be here 15 to inclusions here. So here supply of the goods were 35 lakhs to CALS exam a registered person of Prayagraj, Uttar Pradesh, further amount of 60,000 charges separately on account of municipal taxes. This is also inclusions 15 subsection 2 and discount 15 subsection 3. And the fourth one, we delivered the goods worth 2 lakhs to Jeevan Solutions, a registered person located at Rajasthan on the direction of Raghu Enterprise. Maharashtra tax invoice is issued to Raghu Enterprise. It is a bill to ship to model. Definitely, all these points already we know based on value of supply majorly. And inward supplies, definitely it will be from IDC. So, purchase of raw materials worth 20 lakhs. In that, 1 lakh out of total purchases were not received during the month. Simply, if it all, in order to claim the IDC, you must receive the goods now. Then only you are able to claim the IDC. Therefore, on 1 lakh, definitely you cannot claim the IDC. Easy one, IDC chapter. And purchase of the machinery for manufacturing process worth 2 lakhs from MPQ Private Limited, a GST registered dealer located in Bangalore, Karnataka. The company has claimed the depreciation on full value of the machine, including the GST. 16 subsection 3. Inclusive of GST, depreciation was claimed, no IDC is allowed. Strike 1, no difficulty in this. Purchase a truck worth 15 lakhs from GST registered dealer located at Ajmer, Rajasthan for the transportation of its goods. GST rate on the truck is CGST 14%, SGST 14% and IGST 28%. This is also a straightforward question. On the trucks, IDC is allowed. Okay. And purchase of a car, IDC not allowed generally. Even though it is used for office purpose, straightforward one. Purchase of the goods worth 5 lakhs from DF Buildwell Private Limited, a registered person of Jaipur, for the construction of additional floor of office building. It is also there in MM material ma. It is also straightforward point. It is also IDC. No IDC is allowed. Opening IDC is there. For this opening IDC, what you will do, ma? So, Opening balance is also given in the problem. Based on that, some other details are given. You need to compute the minimum net GST payable. Simple. Step 1, computation of output tax payable. That is those items, value of supply. Step 2, computation of IDC. Step 3, step 1 minus step 2. Very easy question actually in comparison with earlier attempts. Okay. Now 5B. Mr. Ravindra, a registered person in Bhopal, Madhya Pradesh, has provided the following information regarding the outward transactions made during the month of January. So, I think this topic is on exemptions. He was appointed by a recognized sports body as the chief selector. So, with respect to chief selector, even though it is recognized sports body, taxable, and pure labor contract of a independent residential unit, maximum cases it will be exempted. And rented house, he rented house is warehouse. So here what he is doing he is not where he is doing renting of warehouse, therefore it will be taxable. Okay. And next one is providing services to municipal corporation for slum improvement and upgradation, government related services. Next one is charged consideration against Western music dance performance in an event. Definitely it will also be taxable. Straightforward question here. So fifth question is very much easy in comparison with earlier attempts. Now always I told you previously also 6A will be always a tricky question. 6A will be always a tricky question. That's why even day before strategy or so many number of videos I told you that this particular 6A maximum will be adopted from either a circular or a particular topic which is of a more theory oriented, and it will be asked in the form of a problem. Okay, here this topic is based on, see, as per CGST Act 2017, Vishnu Limited is not mandatorily required to register. However, they opted for voluntary registration, applied on Feb 12th, and RC was granted on Feb 24th. He is not making any interstate supplies, and that means it is the voluntary registration. Then if at all you observe 18 subsection 2, then from the date of invoice within 1 year only you can claim the ITC. That line will be there now, 18 subsection 2. Based on that particular line, the entire question of this much was asked. If at all, what is the date of RC? This is the date of RC. We need to check within previous 1 year. If it was there within the previous 1 year, then IDC is allowed. If at all it is any earlier date, IDC is not allowed. Okay, based on that one, actually, in fact, if at all you are having the conceptual clarity on your IDC chapter, then definitely it is a cakewalk for you. But if at all don't have the conceptual clarity, in those cases, it will be a little bit difficult one for the students. So the people who mug up, definitely I will advise them to take this particular 6th one as a choice. Okay. Now 6B, examine the following independent cases and determine the place of supply. Mr. Joy, unregistered person of Kolkata, West Bengal, sends courier through Kolkata, West Bengal based Mohan Courier Agency to his sister in Mumbai, Maharashtra. I think this is 12.8, transportation of the goods. This topic is very much easy one. When we need to check whether it is B2B or B2C, it is a B2C supply. Therefore, where it is handed over, that place. Second one is Mr. Nitin, unregistered person, resides at Madhya Pradesh, books a two-way air journey ticket from Prayag, UP to Jaipur, Rajasthan on 6th September and back. He leaves Prayag on 11th September in the morning flight, landed in Jaipur on the same day. He leaves Jaipur on 15th September in the late night flight and lands in Prayag the next day. This is 12.9 transportation of passengers, straightforward one. And third one is Rizhim Private Limited, located in UP, purchases a manufacturing machine from Manav Steel Industries Limited, located at Jaipur, Rajasthan, for being installed in its factory located at Haridwar, Uttarakhand. It is section 10.1 based. Where it is installed, that place will be the POS. So straightforward question as far as my knowledge is concerned. Next one is 7A GSTR 3B, but that means payment of tax. This question was asked from. If you observe this particular question, there is a shortfall of 16,000 and this shortfall is paid through cash ledger 12,000 and credit ledger 4,000. In this case, are we liable to pay the GST on the gross amount or on the net amount? That is the thing we need to compute. Either on the gross amount or on the net amount. Those are the things we need to compute here. So it is a very much straightforward question in our masterminds material. So if at all you are able to do at least CRDs in masterminds material, in those CRDs at least 2 similar problems are there in our material. You can check them once. And next one is 7B theory question. With respect to TCS, briefly explain the provisions relating to registration, filing of return, depositing of TCS to the government as per the provisions of section 52. Okay. Pure theory question, ma. It is easy to answer. Okay. It was asked for 5 marks, and 8th question is also a theory question. It was there even our guest questions also. This was a direct question from our guest questions, ma. So that's why we always advise you to study the guest questions. Okay. So this one based on theory in value of supply, post supply discounts. Easy to answer this one. Short answer question was there on this. Next one is consideration. In relation to charitable organizations, it is also a theory question. Definitely you can read that particular one. Easy to answer. Next one is, this is from value of supply chapter, and this is from supply chapter. The last one is Mohan Enterprises is a registered person having principal place of business in Gandhinagar, Gujarat. They received the services of advocate, a registered person from Gujarat. Shaker, an unregistered person, provided services of labor to Mohan Enterprises. Explain the provisions relating to issue of invoice by the recipient Mohan. Okay. Enterprise if is liable to pay GST under RCA. That means when the RCM invoice is needed to be issued. That is the thing you need to answer. It is also a theory question, but a little bit brain work is needed for this. So in this entire paper, if you observe, as far as my knowledge is concerned, from the above average student, generally if at all you are intelligent, always you will feel the paper as always easy, but above average student will feel a little bit difficult with respect to this 6A based on 18 subsection 2 the question was asked little bit, but ITC is an important chapter. That's why even the above average student also will read that particular section 18. So that is the case. That's why I'm expecting more people are able to understand the logic there. And the last question here, this one is a little bit tricky theory question. Okay, need to read the question, then you need to explain it. So only these two are difficult from my point of view. Rest of the paper is a very easy one. Therefore, definitely you are able to get a good marks in this particular paper. Hope this particular video will be useful to you. All the best for your remaining exams.